Good morning. Welcome to binary.com. Thank you for joining us here at the live room. And we are glad that you can join us here this 15th of September. So glad that we can take a look at the market together. Always 8 a.m. UK time, of course, as always. And we should make you aware that the following risks are present and definitely very um, something that could influence your trading is the fact that trading for exchange and global financial markets is very high risk. It may not be suitable for all investors and traders. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational and informational purposes only. By continuing watching this webinar, you agree with the disclaimer here and on the binary.com website. And as always, I thank you for your attention on this important statement. So, today you can always, of course, watch live at 8 a.m. UK time, but if you are not able to make it next week or the week after or whenever, you can always register at blog.binary.com/weekly trading room and you'll be able to get the recording a few hours later when it's emailed to your email address. Today's goal, we're going to take a look at the economic calendar and the following 5 pairs as always. So, economic calendar, we have actually quite a heavy week ahead. We have pound news on Wednesday. We have Wednesday, we have FOMC statement, which is always a big one, and a press conference. And we also have Thursday, basically Scottish independence vote, basically on the pound. That could be a very big one. Plus Yellen speaking, and the Bank of Japan governor speaking, plus a Swiss interest rate. So there's a lot of things that could upset or increase the volatility of the market and price. Something that you should be aware of is that. So we'll have to see how price respects and responds to these news events, especially, of course, the FOMC and also the Scottish independence vote is a bit of an unknown factor in this week's equation. So with that said, let's take a look at the currency market now, starting with the euro dollar. Now, the euro dollar has been in a grand downtrend for quite a while. Of course, we've seen, for instance, here weekly candles showing a lot of bearishness, lower lows and lower highs. And last week we didn't really follow through with that. We see a bit of a wick here, a bit of a pin bar. So we didn't get that follow through. Well, throughout the week we did, but we didn't close with the strong close. So there's a bit of a congestion here, a bit of a bounce as we approach 127.50. However, we have to take a look at lower time frames to see if that's a big bounce or just maybe a pause for more downside. Obviously, we broke this rising wedge, the green lines, with a lot of force, and that momentum is not easy to stop. So if we look at it, the bigger picture, it's probably part of a contracting wedge that has been completed. Why? Because this is probably going to turn out to be the A part, the B, the C, the D, and the E part of a bigger wedge, which is this wedge, A, B, C. So there could be a lot of bearish momentum if that is indeed true. And we are seeing that bearish momentum kick into the market on the daily charts ever since we broke that rising wedge. So a tremendous fast fall. And when the price falls that fast, there's usually more follow through. And if we then zoom into the hourly chart, what do we see here? We see a tremendous big move down on Thursday, the 4th of September. That was the euro interest decrease to almost zero. That brought this euro dollar down that day with about 250 pips. We had another follow through, but now we're making kind of a bear flag correction here. And if that price breaks that bear flag, it seems like a good breakout for downside within the downtrend. And there could be space down to 127.50 in my opinion. If price doesn't break this bear flag, then there is a chance that price could retrace higher to, for instance, the 38.2 fib at 130, or if we put the fib from here to the 50 fib of 130. 130, of course, also is a psychological round number, and those numbers also, when broken in the future, tend to be a respect as well for resistance. So now the 130 is not a support but potential resistance, and we'll have to see if price can get there. But if it does, turning spot I would say for downside, or if price moves down faster and it can break the support level, maybe a quicker downside break of the bear flag for the momentum follow through of this downside. So to me, it looks bearish as long as price stays below 130. If it breaks above 130, I'll have to reanalyze and revisit whether this is just a more serious retracement or a reversal. But in any case, I think the reversals doesn't seem likely. It'd probably be a bigger retracement. But below 130, all okay for bearishness. Below this green line, all okay for bearishness in my opinion. And 127.50, of course, could be a level that traders want to be aware of, because that could be, again, a bouncing spot, because it's a bigger weekly support level right in here, these two bottoms. Pound dollar, basically the same story, to be honest. Here too, we broke out of a support trend line like this already a long time ago, and price has just accelerated to the downside, just like the euro dollar. And we do see a lot of dollar strength across the board, so that is not surprising. Also against the pound, and on the 4-hour chart here, you can see the most recent acceleration here. Boom, very fast, looking like a wave 3 to me, and price moving up, going against the trend last week a bit. That looks more like a wave 4. On the weekly chart, you can see that caused the wave 4 caused a bit of a pin bar here on the weekly chart, with higher high and a higher low, or I should say, actually, to be correct, it's more of a bullish pin bar in fact. But in any case, a bit of a bounce there. And if we then look at the daily chart, you can see that bounce again, closing the gap here. 4-hour chart, you can see the price respected the 38.2 fib. So looking for either price to respect the 38.2 fib as it does, and as it did, and then break below the support for a downside break. That could be a good breakout, just like the euro dollar, and we could see a fall maybe to 158.80. Right, that's the minus 272 target. It's also, by the way, as you can see, there's a red line there. It's also the weekly bottom right in here, 158.60, 158.50. So there's a confluence of targets there. So if price does break below this green line, that would be the gap price could fall to. We also, of course, have to be aware of the fact that 160 could be a psychological round number, and that's something, of course, that could stop price as well, besides the targets. If price doesn't move down but retraces back higher, the 50 fib could still be a bouncing spot. Just like the euro dollar, that's what I would say is the line in the sand. If price breaks above the 50, here too, I would have to revisit and reanalyze what's going on, because it's retracing higher than I would expect. I don't expect it because of the entire, daily structure is very bearish. The 4-hour is very bearish, but also because of the AO, the awesome oscillator at the bottom here, showing a lot of momentum, very strong downside, no divergence, and price is now retraced back to the 0 line. So basically here, I'm expecting this to be a retracement and price to fall through to the downside. Now that it hit the zero line, right? The AO hit the 0 line. So the cue for that the 0 line is indeed finished and price could go down, and the Oscar oscillator can also start on its downtrend, is this particular bottom, I think, in my opinion, is the key, the 162 level. Otherwise, this AO could still be growing to the upside if price were to move up. So, this is the first criteria has been met. Now I need to see the second thing, which is price breaking through the bottom. But considering the strong AO here to the downside, which is very bearish and no divergence, I think that downside is going to happen, in my opinion. It's just a question of when and from where. Here you can see that on the hourly, how that looks like, where price retraced, now going sideways, waiting for the break to the downside, or from the 50 fib. The odd USD is a bit different here on the hourly chart. Actually, let me start with a higher time frame. Let me start with this daily time frame here. Why? Because it basically broke out of the consolidation. We were already talking about the odd USD consolidation for weeks and weeks. Price had basically gone sideways for 5-6 months within a relatively tight zone of about 250 pips. The dollar strength was already visible versus the euro, versus the pound, versus the yen, which we'll see in just a second, but not against the Aussie. The Aussie managed, as one of the few, to remain strong against the dollar. And that particular strength failed and just collapsed last week as the AUD USD crashed through this consolidation zone indicated by the green lines. And you can see the crash happened fast with a lot of impulse. Why is that? Look at these candles. Very strong candles, very good sized candles to the downside. Closes near the low, bears in control. Big break with a pretty fast move. A lot of pips, basically, in just a few days. Now, that break happened clean. It was a break, pull back to the broken trend line, and then a continuation. This is called a break, pullback, and continuation. Break, pullback, continuation. Classical break, and no false break to be seen. This is the break that traders, as a trader, you want to catch because these are nice breaks, right? So this is a good breakout. So here you can see, by the way, just in case, if you had doubts, if we zoom in on the weekly chart, look at the breakout candle. This weekly candle, just immense in its size compared to the other weekly candles. The close very near the weekly low, indicating no weakness, no loss of strength of the bears, and bears remaining in control throughout the entire week. So this is begging for more downside, in my opinion. If you look at the daily chart, or maybe even better, the 4-hour chart, what and when could this momentum continue? One thing I think could make sense is putting a fib on this, for instance, and price could retrace back to any of these fibs. 23.6 would close the gap. 38.2 fib would basically be a shallow retracement. The 50 and the 61.8 will be basically hooking back to this broken bottom, right? And the 78 and 88 would be basically very deep fibs. I don't expect price to go that deep. Could always happen, though. You never know. So that's what I'm waiting for. A bit of a bounce. We do have divergence between these these hourly bottoms. So a bit of a bounce to these fibs for more downside is likely. Now, when we get the bounce at these fibs, traders, in my opinion, it's always good to wait for a rejection bar, for instance. That's what I like to do to get more confirmation that price is indeed bouncing at these fib levels. And if price does do that, then what kind of targets would I be looking for to the downside? Minus 272 target, 89.20, minus 618 target, 88.40. But to be honest, those are conservative targets because price on the weekly chart has a bottom all the way at 86.60. That's what price could go to. And in fact, price could go even lower because if you look at this weekly chart, you see a big momentum here, a big momentum here. These upsides have been corrections so far. So if you put a conservative fib on like this, for instance, price could go all the way to 83.60 or maybe even the 80 level. So those would be more aggressive targets. First target, of course, is the bottom. First target are targets just above the bottom, in fact. Then when we break the bottom, we could be heading towards these levels on the AUD USD downside. It certainly does look so, but we have to. I'm taking it step by step. First, looking for a trade in the short term this week for that downside to the bottom. After that, we can start looking for more bearishness and continuation of this downtrend on the AUD USD and uptrend on the dollar. So interesting how the dollar strength finally kicking in against the Aussie, not only against the euro and the pound. The dollar strength against the yen was already visible earlier, but also last week we got the last confirmation needed. So the dollar yen too now following the euro dollar and pound dollar. Basically, big momentum to the upside at various places. First of all, here, then here, then here. This one was the biggest, then here, and now we're getting one again, right? So obviously, most of this momentum was to the upside. We had some big corrections in between, like here was a big triangle. And to be honest, this probably was one of the biggest ones, the second biggest one maybe, or tied with maybe this zone at the bottom right in here. And it did last about 9 months. It was pretty long, almost this entire year so far. Uh, Pretty tight consolidation zone too. But now, as price basically breaks through on the weekly chart here, already had an attempt, first attempt here. We said, well, we don't know. Let's hang on. Let's wait. And then we got the confirmation with this bar, and then a continuation, and last week again a continuation. That particular upside has broken basically this trend line. This resistance trend line is broken, and we also broke basically out of that monthly top right in here. So not only a monthly resistance line, but also a monthly top has been broken in the meantime. Furthermore, if you look at the weekly candle, a close very near the high. So here too, just like the odd USD weekly candle, a lot of strength. The bulls remained in control throughout the week. It's a pretty big candle as well. So although the euro dollar and pound dollar had weekly candles that showed dollar retracement, the dollar yen and odd USD in fact had the opposite, and they showed dollar strength candles. So we're showing that the dollar yen has a lot of potential to the upside. Now that we know that the monthly resistance is out of the way, we can, of course, without at least with less worry, look for continuation of that. The monthly resistance at 105.40 could, of course, turn into support if price does get there. Remember, broken resistance becomes support. So that is potential, but will price get that far? That's the question. If we look at the hourly, you can see basically a bit of a consolidation here. So we might actually continue. Price might actually break above this bull flag for upside. In that case, 107.80 is the target. I'll show you why in just a second. And if not, then I'm expecting price to retrace part of this upside by going down to one of these fibs, like for instance the 23.6, which is equal to this bottom, like for instance the 38.2 fib, which is equal to these tops. Those could be bouncing spots for further upside if price does break through this green consolidation to the downside. Now let's talk about targets. If price does bounce off these fibs or does break above the target here, 108 for the moment. The bigger target, however, if we go to the weekly chart, the bigger target is 111. That's the bigger minus 272 target. The smaller target is this fib, and you can see there's a minus 272 target at about 107.80. So that's the minor minus 272 target, 107.80 of this smaller move up, which bounced off the 50 fib right here. Let me put a color here, green, and we bounced. No, that's too far. Here we went up and we bounced off the 50 fib. That would be the first target, but it's only a first target. The next real target is the minus 618, which then equals the minus 272 target of the bigger swing, which is this swing. All right, so you see confluence of the bigger minus 272 with the smaller minus 618, and that would be the first target, the first bigger target to think of, with the smaller minus 272 at 107.80, 108 as a stopping spot for maybe some kind of retracement, and then follow through to the upside again. That's what I'm expecting. The bigger target, by the way, after the minus 272 is the minus 618, which is all the way at 120. So there could be a big dollar breakout, as we know, on the euro dollar as well, which could have a lot of potential on this weekly chart. If you look at the potential on the euro dollar, not only, of course, for the short term, 127.50 is a target because of this bottom. But once price breaks through 127.50, it could fall to 125, 122, 120. And even if you look from the monthly perspective, if you really want to look at target potential, even down to 113 and parity on the euro dollar. Then we have XAU USD. This too falling and breaking here too, basically some dollar strength against gold as XAU USD continues its down path. It broke this triangle, the orange line, and the magenta line to the downside and accelerating further in its downtrend here. 1240 broken. Next target probably 1180 as we follow through with this momentum to the downside. If we break through 1180, obviously this could break consolidation bottom for a fall down to the target, which is maybe minus 272 target at 1,000. So we could see maybe, for instance, momentum follow through here, consolidation triangle, and then boom, fall to the minus 272 target. It's too soon to tell, but if it does break 1180, that could happen. For the moment, though, we have a strong weekly candle pushing through 1240. So here too, a bit of retracement, looking bearish for more downside to 1180. Alrighty, that wraps up today's session. All in all, basically dollar bullishness against all of the pairs we've seen. Just depends when and where. Of course, a lot of news events that could bring a lot of volatility throughout the week, so be careful of that. But in general, at this moment, though, dollar strength against XAU, yen, Aussie, and retracements against the euro and pound, but expecting follow through. So thanks for being here. Next week we'll be back on the 22nd of September. And if you want to register with your name and email address, this is the link, blog.bannery.com/weekly trading room. Wish you all great trading, a great week, and see you next week. Cheers.